Last week's trades were not all that great in terms of percentage, despite the fact that the analysis was about 60% valid. Hence, I always say that doing analysis is quite different from trading. Yes, executing your analysis. And I will always stand corrected. And by my analysis, you should also learn and accept this skill. Now, hi, welcome back to CMG Aura Space Trading Analysis. That is a weekly analysis. Now, moving forward, last week we were quite entrapped by the pullbacks in our analysis in terms of the DXY, the Japanese yen, and then gold, I think. Right. Not all that's totally bad, but in terms of percentage, that's what I'll say. So according to me, or according to my analysis, I would say that we were not profitable. Comparing that to the previous weeks, and this is week 6. You understand? So week 1, week 2, week 3, week 4. In fact, week 4, 1 to 4 was quite profitable. The 5 was not that great. Now this is week 6. So we are not going to waste time here. We are going to move forward by doing the analysis on DXY, the Japanese yen, and then maybe gold. Now, for the record, on the stock indices or anything concerning commodity, we will do analysis and trade on the fly in the course of the week. But the rest of them, we'll give you the preliminary analysis. Then in the course of the week, we'll give you a confirmation if there's we have to continue or be looking at what we said earlier. Otherwise, we are going to have a different perspective based on what the market is telling us. And this is a pure technical analysis. Now, in the course of the week, I will use the fundamentals to back this claim up. So if you are new here, this is what we do. We give you a weekly analysis on Sunday. Then we trade in the course of the week, giving you confirmation, giving you the edge to withdraw or to continue in that trade. Right. So now let's open up our DXY like we do always. We do a top-down analysis. But for the sake of time, we will do what? We will only be looking at one time frame, right? One time frame in each of the pairs or the instruments, either the DXY or the JPY, because I have already done the analysis. Now, bear in mind, today's week analysis is going to be quite technical. I'm saying this, I may have time to explain some of the terms, or I may leave them hanging. I will ask you to go and do a follow-up, or maybe look it up on the internet or anywhere. Or better still, I have intention of presenting videos on some of these terminologies, right? Some of them are new, maybe new to you. If you are newbie or intermediate, these terms will be new to you. But for the record, this is what I'm going to do. In the course of the week, I may be providing separate videos on them on all our platforms, right? So considering DXY, today I think we have to go up to the daily and then the weekly, right? So I'm not going to waste much time on each of the time frame. So on DXY, we are on the 4H. Now 4H, you see some markings that I've drawn here. Don't be frightened. Don't let it be obscure your vision. So this is week 6. You see the red line. It means that the market has started from somewhere around the yellowish circle. We have moved up a bit. Then we come back to a pullback, a retest, a fair value gap, as people will call it. Now has tested it nicely. Now market is on the rally, moving up. Now we see a black slanted line, a tangent, some will call it. I am expecting price to move to that level and probably move back, a pullback to the slanted red line, right, to that side. Or probably if there's more volume momentum there, we are going to experience a higher continuous rally up to this red line. That is the first perspective. Now, today's analysis is going to be quite indecisive. You may think we are contradicting ourselves, but no problem, because it's a Monday you cannot trust Mondays. So this is what is going to happen. Probably when market opens, market can gap up to that level, and then later there may be some corrections, distribution, accumulation, markup, and then markdown. These are the terms that I was talking about. So this is what we are expecting. Probably when market gets there, it's going to continue moving up. That's what I see on the 4H time frame. Now let's move up to the daily time frame. Now looking at the daily time frame also, you can see we are in the bullish time. The bulls are flexing their muscles. You can see that the power, the pressure is on the side of the bulls. So that's what you see here. So the black line that I drew earlier, you may not understood or understand it well. Now you see why the extension there. So there's this channel which markets were consolidating. Yeah, was consolidating actually within that boundary, and then it broke below to this line, and now retested nicely, and it's going up to that level again. So the level there is either there's going to be a retest for the market to continue selling again, or pulling, just a pullback, not really a reversal, a pullback to that level, or can get there and then move up back into that channel again, right, and probably hit this red line. Red line again is not our determined resistance, but it's just something that we are going to use to test the market. If it gets there, we will be looking at the reactions and then probably move above that, or a pullback small, a consolidation there, accumulation here and there, and then we move up. That is the idea. So the same confluence or the agreement between the 4H and then the 1D. You see the bullish sense. Now moving up to the weekly. Today I'm including the weekly time frame. Why? Because there's quite an indecision happening here, and can be quite confusing. Right now, I've written some numbers. Right, you see some figures 1, 2, 3, 4, 5, 6. Right, I actually use that because I'm not using my PC. I don't have access to the cursor moving here and there. That is it. So I have to use this to make things visible. So now look at the general trend or the channel, like I call. You see the blue here. You see this one is a channel. So when you look at a general perspective or a bigger view of this trend, is a bullish trend. So market was consolidating, bouncing between these boundaries, right? This channel. Now we have gotten to, so generally it's an uptrend. That's one thing. Now in the uptrend, there is up, down, hitting the boundaries, a resistance level, a support level, a resistance level, a support level. Then finally, when you get to this big red candle, very, very bearish, strong bearish candle. Now market has broken below. Now it has broken below, and now there's the recent candle is a bullish candle. Now one may be confused. You are still in the uptrend, right? It has broken below. Now another person or a trader may see that price has broken below and probably is coming for a retest just at the black line. Oh, what is happening? Just at the black line, right? See, you can see still this one. So if you go to the lower time frame, you were seeing what I was telling you, that probably market will get to that level and then reverse a bit. So it's the same thing. And this is the weekly time frame. So the weekly market will be going up, coming down, going up, coming down, going up, coming down. This will be opening, closing in the lower time frame, right? So this is what is going to happen. So when it comes to the higher time frame, like 1H, bulls and then bears will be fighting, a tug of war happening until the week ends, and then we will know, or we'll see who came out to be successful, or the winners. So there's going to be a lot of activity happening here. But when you move down to the lower time frame, you see the nuances here and there, and then mainly we trade on the lower time frame. So this is where we get kicked out, we get profit, we get losses, and then if you are not able to catch the right movement, the right time, your entry and exit levels, if you are not able to catch it well, this is what happens. So you can realize that you may be good analyst, but not necessarily a good trader, right? So that was what happened to us last week. So that's what I'm telling you. So now, continuing from the first trader perspective, price has broken below this black line or the channel, right? But it has gotten, it is coming back again to that black line. So let's see what's the pending candle is going to do. The pending weekly candle is going to do. Is it going to form again and then break below this bullish candle? Is it going to do that, or just be what, playing lurking there and then start going up? Is that what is going to happen? So that's one thing. Either it will form and start selling again, probably to this black line, and then secondly to this black line again, or candle will start forming up and start going up. So when it start going up, generally the person who was saying that you see a bullish trend is correct, because it looks nice. So what happens here is that it's just a pullback, just a brief moment of a pullback, and that is right. So from one perspective, the person is right. As a bull or a bullish trader, the person is right, right? So it has broken below by just what, a pullback, looking at the general perspective, the bigger picture. So just a pullback, right? Now another person, another trader, a different trader might see that it has broken below, and this bullish candle forming there is not really going to continue buying again, because generally if you look at this red line, it's actually what, something that we have not determined, but someone could actually be seeing it as what, a resistance, a strong resistance level. Because now looking at the candles 4, 5, 6, there's a pattern forming there, and that pattern is called an evening star. An evening star, when it forms at the resistance line, it means that sellers are going to take control of the market, and that is what is happening briefly at the moment. So you see, so when you are trading, you don't have to be too biased. Be looking at the market from different perspective. You understand? So that is what we talk about. You understand? So look at the market from different perspective. So from one sense, it looks bullish, another sense, it looks bearish. Now, just test yourself. Be honest with yourself that whatever I'm saying, is it true or not? Is it true or false? Right? That is happening. So let's see what's the candle. So actually, for me to get that confidence and then having that edge, I will decide finally. I am actually going to look at what the recent candle, or in fact, the pending candle is going to look like. Then I will what? I'll be trading, probably be checking from the lower time frame and the higher time frame, and in between the what? The time frames. So you have to be very careful, right? Unless you want to be too biased and then be looking for only bullish upward rallying sense on DXY. So that is it. So you see the bearish candlestick is forming. It's good. It's a good pattern. So which means that the next one candle forming may be bearish, and then we are going to continue what, selling, because market has actually what, done the markup, the distribution, and then the accumulation. So now we are going to what, reverse again, and then probably look at a markdown. You understand? So these are the terms. So markdown means we are going to expect market to what, to be selling, probably down to this blue line, but it may take time, because this is what, a weekly time frame. So you see the indecision that we are seeing here. Now I'm going to look at it from another perspective. Now we have two types of buyers, or in fact participants in the market, either buyer or seller. So I've looked at it from a buyer perspective and then from a seller's perspective. Each of them have proven one in each case. Now coming back again, look at this candlestick pattern again. We have 1, 2, 3. Now look at these candles again. They are what, bearish, an evening star. Once again, an evening star. And then the evening star, what did it happen? It happened at what? The resistance level, right? This resistance level, because this blue line, the top there is a resistance level. And then what happened? Market started selling strongly to this level, and then it started going up again. Somehow, once again, call it what? A pullback, right? A pullback, because getting down to this level, right? And from the third candle, the candle 3, then the next one to your right, what? It's a pullback down there. And then it has formed at the support level, and market has started going up again. So you see what is happening here, right? So you can be doing some counter trading, and that's right. So for a seller, I have proven to you that why it looks this way, right? And then for a buyer also, the market has been rejected, yes, at the at the support level, and then the market has started buying again. That's one sense. Now hold on to that thought. Right now, let's move on again. Look at candle 3, candle 2, that's the bearish candle, and then the next candle to it, right? The next candle, the next 2 candles, right? From candle 3, the next 2 candles, 1, 2, the next 2 candles, they are all bearish. But the third one, the middle there, looks, even though it's bullish, it looks what? Inverted hammer, right? And then to the next one is bullish. Looking at the 3 candlesticks, is what? A morning star. A morning star is a bullish candlestick pattern. So what happened there? It started gapping up again. That is nice. So let's look at another candlestick patterns again. So even within here, I'm seeing different candlestick patterns, and they are all being respected. The psychology behind them is all working out. Now let's move down to candle 3, and then the next candle, right? Candle 3 and the next candle. What does it look like? It's called what? A bullish harami. Now you may not be good with your candlestick patterns. This what, if you want to learn more about these candlestick patterns, check in the bio, the video description, and the video comment section, and then you can do the needful. So a bearish what? Sorry, a bullish harami is forming. A bullish harami is a bullish pattern, right? So market is going to buy. So hence, if you're looking at 2 candlesticks, it's still what? Bullish. So market has started going up. So we have that thought. Let's move on again to this candle that we are seeing here. Candle 6 and the last candle. Candle 6 and the last candle, because the last candle has actually closed. It closed last week, Friday. So looking at this candle, what is happening here? It is what? Bullish harami once again. A bullish harami means what? The market is going to what? Continue buying. When a bullish harami happens or forms along an uptrend, it means that the trend is going to continue going in that direction. So you see, so today's analysis is quite technical, yet you have to be very, very careful. That is why I'm giving you the options, so that you don't think I am saying one thing. I am actually saying 2 things. So in the course of the week will justify the means, right? So that's what I'm saying. So if you look at it from one perspective, it's true. If you look at it from another perspective, we are saying a valid point, right? So you have to be very careful. So you can be trading in the lower time frame, but when you're trading, don't forget to put your SLs. And then I think this week swing trade is not going to be advisable, because my strategy is a swing trade. But this week I am not really going to do that. I may decide when I check the fundamentals and I'm very confident, then I'll come back. So that is why in the channel I really communicate as if I'm chatting to one person, as a one-on-one communication, right? So anything that I see, I come to update. So please follow, like, subscribe, and then share. So that's what I see on the DXY. Very indecisive, even though the general perspective or the general trend is a bullish trend. But even though it's a bullish trend, we are actually at a point which we can consider to be a resistance level, which the market is at the moment respecting, right? So that is what I have to say on DXY. So let's move to JPY. On JPY too, I see the same thing happening, but it's not going to be that difficult, or the analysis I'm not going to speak that much, because that one is very evident. Now, at the moment, looking at the market from a cascading or internal structure, right? This is what I see. We at the moment, we started from this level, let's say this black line, right? And market has started rallying up. So now we have gotten to a point where it looks like a consolidation, or some will call accumulation. The market is relaxing, resting. Then it's going to look for another volume or momentum to move in the direction that is going to decide based on the participants with their volumes in the market, right? So we have moved up, and now we are consolidating here. So you see, I've done the markouts, very nice, and you see here, so consolidating. Now we are at this level. Our target is at this black line once again, which is not the final or the resistance level that we are going to expect the market to reverse, but probably just what a respect or reaction that we are going to expect there. So we have gotten to this level. Now this looks like market has broken out, but even though it broke out, it has immediately come back below the what the resistance level. You understand? The resistance level, it has come down below it, right? So it's not really what a support, but now we call it a resistance because it has come down below that what line. And then once again, the reset candle looks what bullish, right? So where we are is very, very indecisive. Either market is going to continue with the consolidation for more, since maybe the lack of volume on the side of the bulls, so the sellers can still be in charge of the market for some time. So people who trade consolidation or sideways, this is their what their platform, their stronghold, that they can actually get some coins here. So that's what I see here. Yet I'm going to wait and then look, because now fake out in the market is more, right? It's more on the high side. You see more fake outs. So that's what I see here. Either we are coming down to this level, or we are breaking out and then moving up to that red line and then look for and see what is going to happen. But still, we can still be consolidating around here. A choppy market can be happening here, right? It's been a long time I saw a choppy market, but no problem. Anything is bound to happen. So this is what we see now. That's what I see. If you're going to the higher time frame or lower time frame, the same thing. So it's still quite indecisive. But if you're already swinging, I think you can continue. You just have to manage your risk to reward ratio, and that will be all. So I wouldn't say that much here. We will move to what is it? Maybe gold, right? No, I think I don't want to waste all the time here. So I will be doing the analysis on gold on the fly, and just be following the channel, right? So I will say thank you very much for watching. Please like, subscribe, and share, and then be on the page as we are giving another edition of forex trading. Yes, very concise and brief, and you can be watching there. I'm going to tackle the term called market cycles: accumulation, distribution, markup, and markdown, and then be looking at the differences between trading plan, trading style, and trading strategy. It's quite confusing if you're a newbie. I'm going to draw the clear lines between the two, and then you'll be good to go. So I always catch you in the next one. Stay safe, trade safe. Bye for now.